Here we are a few weeks before the big day, and we figured you're probably over being told how to feel and what to believe and who you should choose. So take a break from all of that and strictly go data heavy today with no commentary. In other words, just the facts, ma'am. And only a few of you will get that reference. Let's dig in.
Just the facts, ma'am. You leave anything else behind?
Out of all the charts and graphs and data we consumed this week for the show, I found this one to be the most relevant. Again, no commentary on how you should feel, no spin today, just the data and facts, and here's the first one. This is growth of $100 in the S&P 500 since 1929 under both Republicans and Democrats. Seemed pretty good either way, just saying. Next up, single-family inventory is up 33% year over year, and you'll see how 2024 lines up compared to other years since 2015. Here's another interesting one. High credit scores dominate mortgages right now. Huge increase over the past few years. Credit scores are up, which is nice, but home affordability is still straight. That's a pretty big gap that will need to fall back in line. And the question is, what's more likely to happen? Income increases massively or rates drop to help affordability? No commentary today, so I can't tell you my thoughts on that. Yet another interesting stat here, U.S. homeowners' home equity is at an all-time high, guys, $35 trillion. Great news, but also part of the lock-in problem we've talked about, as much of this is locked in at lower rates. I heard someone this week call America house poor, which is kind of funny considering the graph that we're looking at here. As we said, most of the equity is locked in at low rates, and this is how it all shakes out. Nearly 60% at 4% or lower, which is wild. As a result of those two previous graphs, Americans' loan to value is at an all-time low as well, below 50%. Again, wild stats today. Another one here, and all of this is tying together nicely for the people that own homes. We didn't mean to make a case for home ownership here and the massive positive results for them, but the data is just kind of stacking up that way today. But another one that is really cool for homeowners, 34 million are now mortgage free, which is an all-time record as well. So tons of net worth in the form of equity, and the leverage used to acquire all of that is at all-time lows. Again, homeowners faring very well despite all the craziness that's going on. And speaking of craziness, here's another interesting yet concerning stat. Aggregate excess savings since 2020 has taken a massive dive from our all-time highs. You can compare previous recessions and see that many of them rose post-recession. Our mini recession of 2020 spiked savings to an all-time high, but also quickly reversed. Yikes. Let's move on from homeowners to the government. Their financials aren't faring as well as homeowners. Here's the U.S. federal net interest paid overlaid with defense spending. That's a wild spike in net interest since 2020. Another visual of that here. Hopefully that old saying rings true at some point for us. What goes up must come down, hopefully, but maybe not, because if we zoom in closer, the last few weeks, we see yet another spike. For perspective, let me put that into context for everyone. Total U.S. debt jumped $473 billion over the past 3 weeks alone. Let's zoom in even closer to an individual level, and the U.S. has taken on $1,450 of debt for every American over the past 3 weeks alone.
A bullshit?
2024 marks the first year over $1 trillion in interest expense. Wrapping up with our last two, U.S. existing home sales on track for the worst year since 1985, a 30-year low. Will that put pressure on home values? We shall see. Lastly, in June, there was almost a 3% spread between the effective mortgage rate and the Freddie Mac 30-year mortgage rate. This is the largest spread we've seen since the 70s, and something that will certainly need to fall back in line. I'll leave you with the good news, or at least a good thought and belief. Although rates have risen as of late, I do believe they will come back down in the long run. Several of the economic reports and graphs that we showed today would support the need for that. For me, I don't think it's a matter of if, but when.
Whoa, 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 whoa! Stop! You're not yet subscribed to the show? That's scary, right? Subscribe down below, and we'll see you next time. Now, back to the show.
Lots of great data today that should be shared on social and within your company. We didn't set out to make the case for home ownership today, but it kind of naturally happened that way with all the data that we shared. It's also great news, and also proves once again why homeowners' net worth is 40 times greater than renters. Share all of this data, and we'll see you guys next week.